Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're talking about the week ahead. We're talking about 2026, the first full trading week, and man, we've got a doozy for you. NFP's on Friday. That's going to be the headliner. Right now, we're seeing some serious market volatility. U.S. stocks are trending higher. Commodities are all over the board. We have natural gas coming off of session lows. We have U.S. oil textbook short squeeze. We talked about the short squeeze on Saturday live after the Venezuela strikes on Venezuela. There was no question about today being a very, very delicate session. For me, I'm looking at price action. I'm going, oh boy, the right thing was to not get involved today in the crude oil market. I'm going to wait for this thing to top out, and then we're going to be taking some shots to the short side of that. I'm going to talk about the reasons why a little bit later on. But right now, we're in a state of flux. We're in a state of global flux, and everybody needs to understand and be very, very clear about what's ahead of us in 2026. There's going to be some major geopolitical events in 2026. Now, a lot of speculation right now on what exactly is going to happen in Latin America. All of a sudden, China and Taiwan are on the front burner right now. A lot of people believe that the U.S. strikes on Venezuela are going to trigger a tit-for-tat type of exchange between really the three global superpowers right now. That's the United States, Russia, and China. Now, we could also debate that India is in that mix as well. We're going to wait on that because it's very complex. A lot of that has to do with where India is getting its energy from. So this year is going to be about politics and geopolitics. And what that's going to do, it's going to set the stage for some amazing trading, some amazing trading. And you can see I've been on this for a while now today and yesterday as well. So I'm sort of dialed in pretty well about what's happening to the markets right now. There's a couple observations that jump right off the charts at me. Number one, stocks are trending higher and the VIX is trending higher. That means there's a little bit more risk appetite, but yet stock prices are rising. That means nobody knows what the hell's going on right now. We are in a very, very big state of flux. There's a lot of questions out there, and we're going to do our best to answer as many of them as we can. So I want to welcome everybody back to the Trading Room. T. Marina, good to see you. T. Thami, good to see you. Thami, Bobby Bob, always a pleasure. Bobby, Tuku, good to see you. Tuku, Lita, Ralph H. All right, guys, fantastic. We got a lot of folks here. Bobby Bob, silver and stocks kindly. Yeah, we're going to look at stocks. We're going to look at silver. We're going to look at energies. We've got a couple of trade updates to sort of get you up to speed on. I think that we're in an interesting situation when it comes to trading. Today's going to be delicate, and we knew today was going to be delicate going in, but there's nothing wrong with that. I think that we're in pretty good shape here early on. We've got one trade idea that I'm really starting to like. I would love to start off the year with a nice victory, and I think we're going to get it. So I want to welcome everybody back. Tina, always a pleasure, Tina. All right. Locked and loaded, ready to go, guys. Okay, so the big thing that we need to be understanding what's happening in the markets is the U.S. strikes on Venezuela. During the weekend hours, as it always happens, we had a major geopolitical event, and what that was the United States making a daring extraction of Maduro from Venezuela. He's actually in court today in New York City. And they're going to go through the whole legal rigmarole. That's going to take a long time to play out. It won't be fast. So don't expect anything to be really rectified there. What we can say about it is it was an incredible success for a military operation to take no casualties, and actually taking hostile fire was really sort of amazing on the United States part. Going into a major metropolitan area and extracting a leader is no easy task. So a lot of people are really blown away by the precision that operation was carried out. That being said, is this just the beginning of something bigger? The markets right now, U.S. stocks are up. The thing that everybody's watching, and me included, is going to be your oil markets. Your oil markets are absolutely huge, that you understand what's happening here. And I talked a lot about this we had an emergency Saturday broadcast that a lot of you tuned into, where I covered the situation as it was going to develop. This candle right here is exactly what we sort of expected. And go back to Saturday's stream, take a look at it. I was very, very specific about, listen, what happened in Venezuela was a long-term bearish market driver. If the United States brings $17 trillion worth of oil into the U.S. and on global markets, that's going to be an incredible bearish market driver. We talked about our downside targets somewhere around $44. As far as what's happened today, it's been an absolute head fake. We saw initial selling that took us down to about 56.50. We saw an overnight washout down around 56.31, and now we've seen the rally. And what's happening in this rally? Retail shorts are getting eliminated. It's too tough to hold a short position right now. Prices are up above 58 and a quarter for no real reason. Now, the only thing that could really fundamentally be driving these oil prices higher is maybe more strikes. Maybe more strikes on Latin America. There have been some saber rattling out of the Trump administration. Trump calls out Colombia's President Petro, and Cuba's. There was also some saber rattling out of Venezuela from that delegation that's now in power. The vice president is in control down there. Actually said that there were going to be some military resistance towards the Trump administration and what they want to do leadership-wise in Venezuela. That would be an incredibly poor idea. And what that will do is that would set up potentially another wave of attacks. In essence, that is what your long side bettors or traders are betting on today. They're betting on this thing bogging down into a quagmire. I don't believe that's going to happen. I'm confident that some deals have been made. We don't know what they are. They're behind the scenes. But I was very, very surprised that you would see sort of a military operation go that smoothly. They rarely do. Typically, if it was, they probably knew they were coming, maybe signed a deal or something with leadership down there to say, hey, we're coming in, we're getting your leader, and if you don't toe the line, we're going to come and get you. And I'm pretty sure that's sort of the idea right now. The longs are in control right now. There's no question about it. U.S. oil's up 1.65%. Now, just because I'm long-term bearish now does not mean that we can't get a short-term rally. And that's exactly what we've had today. 58 has really been the consolidation point for U.S. oil early in the session. To me, it's very evidence what's happened. That was sort of your 8:30 a.m. There was your 8 o'clock a.m. So they're right there. There's your U.S. Open. Volume starts coming back into the market. Nice sell-off and a retracement. Then a head fake knocked out all your retail shorts. And right now we're just milling around. Don't be surprised if this lasts for a few days. Now, how would we be looking to trade U.S. oil? Well, I mean, big picture, I want to get short. I want to get short, but we can't just get short on the open. There's a lot of retail traders that did just that, and they sat around saying, okay, well, we're going to go short. Trump's going to take the oil, dump it on the market, and we're going to go short. And I'd say, yeah, well, is that a good idea just to take a short at market? The answer is no, you cannot do that. You are being eliminated and crushed right now if you just sold on the open. You got a great open. You got a great rush of almost $1 south in the first minute of trade. And after that, the buyback has been on. We had a bit of a sell-off during the overnight, and now the buyback's back on. There is no limit to how high this market can go. There's none. Right here, you can sort of see what's today's high. Today's high is somewhere right around 58, 51, 62%, big time zone. Keep a close eye on that as resistance. If we do break out of that, then you're probably going to move north. Don't be surprised if we go up and touch 60. Now, from 60, I'm selling. I'm selling with both barrels. The only thing that would keep me off of a sell from 60, an aggressive sell from 60, would be if we do see the United States launch a full invasion of Venezuela, or if we see further military action maybe against Colombia. There's talks of strikes on Mexico right now. Truly, everything is on the table. Iran is falling at this point. If you're in that region, then you probably know more about it than I do. News very sketchy out of that region. Big protests. There's talk of potentially the Khomeini skipping town. We don't know what's going to happen here. This is a point in history where if you're on the right side of these market moves, you can do very, very well. You can see I'm excited today. I'm always excited. But today especially, when I see this kind of action in the market on the first real trading day of the year. Friday was a trading day, but everybody was still on vacation. We were working. It's because we want to be ready. Today was the first trading day, and look what you have. You've got big-time moves. You've got big-time moves across the board. And realistically, silver, we got to cover silver. We're going to do that in just a second. Gold moving higher, silver moving higher. Huge gold and silver reserves in Venezuela. The world right now is on edge trying to figure out what these commodity markets are going to look like. And don't kid yourself. Even though stocks are up right now, commodities are the engine that's driving everything. Keep a close eye on that relationship. Also, crypto. What about crypto? We can't forget something like a Bitcoin. Bitcoin breaking high, 94, 95,000. That's fantastic news if you're a bull. The weekly chart we saw went right down to sort of our line in the sand, was 85. We talked about this on Saturday as well. You can see this big-time bullish break was right there off of our 78%, 85. Now we're knocking heads with 94, 280. Big-time resistance zone. We're going to break it. We're going to 100. This has the feel of a risk on. This really has the feel of a risk on environment. Given the fact that you may see war escalations, it feels to me like everything's going to fall into place here by the end of Q1 this year. It looks like you're going to have some serious resolutions to many conflicts around the world. That's what this trading is telling me right now. People are betting. They're betting on crypto. I've been sort of outspoken about being bullish crypto. No question. No question. Bullish commodities, except for energies. Yeah, I think you got to remain bullish gold and silver. As far as the U.S. dollar, I expect the U.S. dollar to slide throughout this year through a series of rate cuts and cheap energy. Cheap energy with rate cuts, that's the economic engine that's going to make a lot of people bet on the United States. That's going to drive stocks higher. That's going to drive the risk assets higher, potentially put this country in a very interesting position, put the global economy in a very interesting position. And guys, it is not going to take long. Today was a confirmation that 2026 is going to be a big-time year, and I think things are going to stabilize here within a week or two, and we're going to be in for some great trading. So welcome to 2026. I wanted to cover as much as I could in the first 10 minutes, and that's a pretty good look at what's happening now news-wise. We're going to talk speculation. We're going to talk about some events. Make no mistake, the number one market driver in the world right now is war. It is geopolitics. It's what's going on in Latin America. It's what's going on in China and Taiwan. It's what's going on in Iran. And honestly, way on the back burner is what's going on in the Russia-Ukraine situation. Make no mistake, those are the market drivers. Okay, let's move on. We got a bunch of comments here. I'll cover some comments, and we're going to dive into our presentation as per usual. I'm going to go through our key events for today. We've got a couple trade updates too to hit. One that's just I'm absolutely loving it. I'm absolutely loving it. It's starting to come back our way, and I like that. All right, let me see. We've got a lot going on here. Ahmed, good to see you, Ahmed. Welcome. Let me see, Ahmed, when it happens, I simply smile, and Shayna's got a lot to do about it. Yeah, right. They should do a federation ID of all South American countries, some kind of like Europeans. Yeah, I don't know. There's lots of things that are going to happen in Latin America in the next several years. Beautiful region. If you're from that region, beautiful region. I had an opportunity to go to Costa Rica years ago. Absolutely loved it. I mean, the jungle down there is like nothing I've never seen as being a small town country boy from Montana up here. We don't have rainforest. I loved it. I thought it was really great. Had an opportunity to go fishing down there. Mexico, I've been all over Mexico. And honestly, haven't been in quite some time because it's been a rather dangerous place to be. In my opinion, it wasn't worth the risk. However, I think all that's about to change, and it's going to be a real exciting time for a lot of people, and we're going to be one of them. We're going to position ourselves properly, and we're going to do some nice work. Andrea Garwell, good to see you. Andrea, welcome. PM, good to see you. PM Sis, welcome. Let me see. Happy 2026, Tina. Absolutely. Silver's a 5% increase. Yeah, we're going to pull silver here in a minute. One last comment. TM, didn't the Rockefellers expand Standard Oil Company to Venezuela back in the early 1900s? I believe so, TM. I know they were in Ecuador pretty thick. I'm not necessarily sure about the holdings in Venezuela, but when the communists took over in Venezuela, they nationalized the oil. So that meant all the companies that were operating down there, no bueno. It didn't work for them. That's going to be different. Do you think perhaps the U.S. is taking it back with this takeover? I think the U.S. is going to take back a lot of oil from there. And I say take back just because the companies that were operating there are going to go back to operating there in one form or another. Now, whether that's right or wrong, that's not up to me. I'm a trader. I trade crude oil. I trade stocks. We trade crypto. I'm not going to sit here and give you a political commentary, but believe you me, there is a tremendous incentive to be there, and that's why the United States is there. Also, it's a sphere of influence thing. Make no mistake, China was on the ground doing deals with Maduro. They shook hands several hours before he was apprehended. China was in the region deep. Russia was in the region deep. Take a look at the Russia-Venezuela gold trade. It's absolutely huge. The United States decided that they weren't going to allow that. We're going to see exactly how it plays out. But we're a long ways from the finish line here. But stability to the region, it's going to take a bit, but it'll be there. It looks to me like it's going to be there. So we will see exactly what happens. Okay, let's get on with it. Too much politics already, but we've got to talk about it because it's the number one market driver this year. It really is. Trade update, Euro USD in play to open 2026. Let's go ahead and take a look at the chart. This was a nasty trade early. This was one of those that we had an entry somewhere right around 116.94-ish. we went right down to about 116.59. Now our stop loss was right around 50-ish. 116.54-ish, so that was a fantastic stop loss. We sort of bounced up dramatically on today's U.S. Open. So the dollar is sort of losing some ground. It does not surprise me at all. I think that's going to be the case throughout this calendar year. We just got to wait and stay tuned. But right there, you see that bounce, and your take profit is up there about 40 pips, and we're just about there, about 16 pips. Very confident that we get that to open up the trading week. Also had another trade update that we put out today. Now, this one's sort of interesting. This is an Aussie CAD. Now, the reason why we're looking at the Aussie CAD is because of commodities. No question about it. We wanted to make darn sure that we had an opportunity potentially to get in on a decent trade. And what that means is we need volatility. We need volatility. That's what pulls the trailer. That's what drives the boat. Whatever you want to say, we need the action. And right now, the Aussie CAD is on the move. Why? Commodity, this is a complete commodity pair. Australian dollar, driven by gold, driven by metals. Canadian dollar, driven by oil, driven by natural gas. And you add all that up, you put it in a pot and stir it, and you get volatility. Well, there's your volatility right there. We're on the march right towards last year's highs, which were established in December, which I absolutely am very, very fond of big round numbers. You guys know me. You know what I think of big round numbers, and somewhere right up in there, I'm looking at 92, I believe 92.56-ish is last year's high. So we're selling 49s there, trying to get that quick scalp. We've got about 15 pips to get there. I do like this opportunity. I like the opportunity to play off of key levels. Now, is it possible we get a break and a run above last year's high? Absolutely. I expect some selling to dig in. I expect some sellers to dig in there. I expect the commodity markets to shift here as we roll into the Tuesday session. But one thing is for sure, there's going to be some volatility there. Where there's volatility, there's opportunity. Sometimes it doesn't pay you to run away from risk. Sometimes you need to be running into risk. For me, this one's on the move, and this would be our second trade idea of the year. I really like that first one's in great shape. This one's in pretty good shape as well. Let's see Joshua. Good to see you, Joshua. Welcome. As far as let's get on to some of our requests here before we go over sort of this week's schedule. Silver was definitely on everybody's radar right now. This is a 30-minute chart, a 4-year silver, your XAG USD. This is some intraday action here. And you can see right there from that swing low, about 7:30 a.m. Eastern, right to that tippy top up around $78, $77.89. There's your pullback, and we're sort of intraday having a heck of a fight right here between 76.63 and 76 and a quarter. That tells me there's a tremendous number of bidders right there at 76.50. A lot of confidence to the top side of this market. Sort of the bidders are reestablishing themselves, sort of showing their heads, saying, hey, listen, we really like silver to the top side. Interesting dynamic that everybody would be bidding silver in this instance, although war, geopolitical strife, all that uncertainty typically drives metals higher. There's no two ways about that. Typically, it's very, very good to metals. The difference in this situation is these supposed silver and gold reserves that Venezuela's sitting on. Now, the idea that you would open up another big supplier of silver and a lot of those reserves to the rest of the world theoretically would be a bearish market driver, at least the idea that that could happen in the short term. It's not happening. This is a bullish market, complete bull market. I don't want any part of this thing to the short side. If you wanted to bid this intraday, you probably could get away with doing just that. It's just be careful with your risk. I mean, anything can happen. This market can sell off back down to 75 before we continue higher. I really like that on an intraday trade, though. 76 right there, 76.75. Probably a pretty good late day bid. As far as what can we expect later on in the session, well, I mean, it's really hard to say. The move's there. I mean, there's your daily chart. So what do you got? You're up about 5.5%. You really came off of this, really compressed on the 2nd of January. We talked about Friday being sort of a lame duck session, and there's your break and your run towards what? Your all-time highs, which are up there at 84. So what you need to do here is if you're trading silver, mark these lines on your chart. That high right there is about 84. Keep a close eye on 84. For me, the big 10,000-pound elephant in the room, or whatever you want to call it, is right there at 80. So for me, it's relatively simple to trade this. I'm looking to you want to get long if you possibly can. You want to get long towards 80, and then right around 80, maybe reconsider your position, something like maybe a short-term scalp from 80, but I wouldn't even mess with the short side of this market at all. You can see the sellers dug in right in front of 85. They sold 84s. I believe we're going higher. I believe we're going a lot higher. I think we're going to 100. Does it happen right now? My bet is 75 to 100 is going to happen faster than 50 to 75 did. So let's go ahead. You can count the days when we hit 50, so it was somewhere right down in here. So what did we have? About 4 weeks there, something like that, 5-6 weeks before we got the big compression, the big volatility right at 80. And I'm looking for maybe we've only traded 75. How many days now? 1, 2, 3, 4, 5, 6. I think you're looking at a next leg up, and it could happen anytime. So for me, what does that mean? It means I want to get long. I want to get long any way that I can. I don't care for this 4-hour sort of market structure, sort of a spike low, spike high, now compression. I'm not into it. So let's go ahead and let's step back to our daily chart, have a good look at maybe we can get a pullback. I mean, any kind of pullback for me is definitely getting my attention. Spike low there to a spike high. And that could be a very beautiful thing right there. Very beautiful thing. Pullback zone, maybe somewhere right around, yeah, I mean, it's almost a perfect trade, 75s. This is a big market with big volatility in it. If you try to be fine down to the pip, you're going to run into trouble. You need to be flexible with your thinking. 75, if I have a 38% retracement on basically a 3-day range at 74.88, I'm looking at 75s. So whatever you have to do to dial your leverage down to make that work, it's probably in the ballpark. So you definitely want to do that. I'm looking at that right now. I'm looking at silver pretty much every 20 seconds, it seems like. But just a fantastic market, great trading. I'm very interested, though. Even that 30-minute chart has my eye as we roll deeper into the session. Like I said, this would be deemed what I call a higher risk trade, something like that on that current wave. That's an interesting area right up there at 76, 75-ish. What would the U.S. session look like? Something right around here. There would be your cash open. So you can see you're getting pretty deep into a retracement sequence from that U.S. session. Does the rally continue or does it fizzle? Like I said, I want to make my mistakes to the long, but if we do sell off later today, it wouldn't surprise me at all. I mean, the market has been absolutely rocking and rolling, and that's really something to see out of silver. A silver market that for the longest time would not move, and it is on absolute fire right now. That's for sure. Let me see. Universal. Good to see you, Universal. Hey, Shane, gold and geopolitics. None can predict. It's extremely uncertain. Any moment, anything can happen after what happened in Venezuela. It's literally frustrating to absorb. The key is to adapt, absolutely. Just remember, I mean, one of the old sayings I used to have on these live streams is if it has a pulse, we can trade it. I mean, that's the bottom line. If it has a pulse, we can trade it. And the bottom line is this. All these markets have a pulse. Fall back on your technicals. It's very, very difficult to sit here and fundamentally trade when you're looking at a situation where anything can happen at any given moment. We talked about this on Saturday during the news brief or the news blitz. It was very important that we understood that even though we have a bearish prognosis for WTI crude oil, there's absolutely no question about that now. It didn't mean we couldn't see a rally today. You know, it's the old thing. I mean, what is it? Sheep get sheared and pigs get slaughtered. There's a lot of pigs getting slaughtered today. A lot of retail shorts stepped up to the plate and said, I'm going short. I've got a $25,000 account. I'm going to go ahead and take a short. I'm in perfect position to catch this run downwards. Take a look at the comments beneath the live stream that I did. Well, I could show them to you. The idea is short it. And I go, not so fast, my friend. Remember, the market is out to get as many people as it can. It's out to get me. It's out to get you. Now, the beauty of this is we can keep our left up and not let it get us. Be smarter than the average bear. Don't run in. I had it on my X account over the weekend. I go, fools rush in. We don't know what's going to happen. Right now, we got a pretty darn good idea what's happening. The markets are really digging the long side of 2026. That has to do with rate cuts. More on that in a minute. But also, the markets are very, very skeptical about this just being an isolated incident in Venezuela. They're not sure. They think that maybe another wave of attacks is coming. We've got to consider that as being a potential. And if that does happen, then crude oil does go up. But eventually, without Maduro there, with a more, let me put this a different way, with a more cooperative, I guess, government there, the oil is going to flow. And it's going to flow like it did back in the 90s. So if that's the case, the 80s and 90s, if that's the case, crude oil is going to head down, even though the dollar is going to weaken. Something like that. Let me see. Placing a pending order at 76 on silver. All right, Tina, that's aggressive. But hey, go, if you got to do it, you got to do it. I get it. Believe me, I understand. That silver market's juicy. There's a lot of opportunity there. That's for sure. All right, week one. I mean, this is big. Week 1, 2026, our first full trading week of 2026. This is going to be a big week. I'm excited already. Can't wait to get involved. ISM PMIs, I'm not interested in all. That did nothing today. This is all about the news cycle. German CPI and S&P Global PMIs, that's interesting. German CPI may, in fact, generate a little bit of heat on that Euro USD. Right now we're printing about 117.20. Profit targets up there at about 117.34. Love that trade. Came back nicely. Sort of like in golf. I don't know if you guys play golf, but I'm playing the draw there. You hit that ball over to the right, and it sort of comes back around. It's beautiful, absolutely beautiful playing the draw on that. I love it when a trade comes back and doesn't knock us out before the going gets really good. Trading support and resistance levels, that's an occupational hazard. Let me see, 100% right. All right, Wednesday, EU CPI, ADP employment, jolts jobs. The focus will shift midweek sort of from this Venezuela action into our jobs numbers. However, geopolitics will be the number one market driver. We'll have to wait and see how it pans out. Thursday, weekly jobless claims. There's going to be more emphasis on these than usual because everybody is gearing up for Friday's U.S. non-farm payrolls report. That's the big one. That's the big one. That's the one that everybody's watching. We want to see what December's jobs numbers look like, and we want to see if they're down or up. That is key. We've got a bit of a synopsis for you on this week's Switch Markets newsletter. Be sure to check that out. We're actually expecting the jobs to come in a little bit weaker. We'll talk about that as the week progresses. Huge. We'll have NFP live for you. We'll trade the action live as well. As far as today goes, ISM manufacturing PMI means nothing. I'm not even going to mention it. 3 and 6 month T-bill auctions. These are interesting. You'll notice that bond yields are down just a little bit. That suggests that long-term investors, the powers that be, the institutions, believe that you're going to see an easing cycle, and that long-term debt from 3 to 6 months out, they're paying less of a yield because they believe there's going to be more money in the system. We'll break this down the entire year as it develops. Atlanta Fed GDP now 2.7%, came in much lower than expected, 3.0%. Sort of a conflict between last month's GDP numbers and the Atlanta Fed's GDP numbers. Doesn't really mean a whole lot, just suggests that maybe in the southern region you see a bit of slowing. Once again, I don't put a whole lot of stock in any of those numbers. This is what we're going to be focusing on for the foreseeable future. Interest rate expectations. The January meeting, first meeting of the year is going to be 28th of January. It'll be here before you know it. I'll have all the coverage live for you. We're looking at about an 84% chance that those rates are held firm. I believe that. I don't think you're going to see a rate cut here in January. But remember, Jay Powell's time at the Fed is short. I think the rate cuts are going to be sort of middle loaded. We're going to see them towards the spring and summer and fall months, and I think they're going to be aggressive. Buckle up, get ready. It's going to be a lot of fun. Right here, this is what we call a bell curve, a Gaussian curve, a normal distribution, whatever you want to call it. Full disclosure, in college, I was horrible in statistics. I was not the guy that you went to program computers back in the old days, and I was not the guy you came to talk statistics. But I remember the concept of a bell curve because, well, I was typically, my grades, I was landing somewhere in the middle of it. I was never an upper outlier, and I was never a lower outlier. So when we start talking about normal distributions and Gaussian curves, bell curves, whatever you want to call it, the bottom line is this: the middle values are where everybody believes the uncertainty is going to fall. So right now you're looking at about 2.75, that range right there, all the way up to about 3.75. So we actually believe that the interest rates are going to stay relatively firm, maybe come down by a half point. I don't believe that at all. If you're asking me, Shane, what do you think about interest rates? You're going to see them down in the 2s, 2.25 by the end of the year. Very aggressive. It's going to be very aggressive. Don't kid yourself. But it's not going to happen right away. It's going to happen a little bit later on this year. I know I'm always saying it's coming. But as traders, we're forward thinkers. We look forward. We don't look back. We evaluate what we did today and yesterday to make sure that we don't repeat the same mistakes and we do even better tomorrow. So when we look at these numbers and we look at projections, it's all about what is coming, not what was. Always remember that. Listen, past historical price data is very important. That's how we determine ranges. That's how we build our trades. But what's more important is how the next price bar forms, not how the last one forms. We use all the evidence at our disposal to try to interpret how the next price bar forms. Quick story. When I broke into the market, I was taught to trade by my uncle, Gary Vernier. He traded for Shell Oil. He was a big shot on Wall Street back in the 90s, the late 80s, early 90s. And what he told me was this. His trading day typically was about 6 hours long. And what he did was he divided it up into 30-minute bars. He goes, listen, there's only 12 price bars in my trading day. All I have to do is figure out how one of those price bars is going to form, and I'm going to make my money for the day. And I took that and I said, I was pretty smart. So that's sort of how I've built my approach. I say, okay, well, let's say I'm going to trade, a 5-minute chart, and I'm going to trade it from 8 o'clock my time to 9 o'clock my time. What is that? 60 minutes, 60 divided by 5, that's 12 bars. All I got to do is figure out how one of those 12 bars is going to form, and I'm in great shape. Something to think about there if you're struggling. Don't make it hard. Make it easy. Trading can be easy, guys. That was my old baseball coach when I was a baseball player. He goes, it's an easy game. You throw the ball, you catch the ball, you hit the ball. It's an easy game. Trading's easy. Buy low, sell high, buy low, rinse and repeat. That's what we're going to do in 2026. All right. If you want to get in on the action, be sure to head on over to the switchmarkets.com brokerage service. They've got you covered if you're an international locale. If you don't believe me, check out Trustpilot, 842 reviews. Check those reviews out. Pretty darn good rating. What you've got here is pretty much everything you need to trade. Every market you could ever imagine. Thousands of global markets, commodities, Forex, CFDs, stock CFDs. Pretty good stuff are available. You see all these indices and everything ready to rock and roll. Brent crude, we didn't even talk about Brent. Probably talk about that a little bit later this week, but that's also up 1% today. High leverage, zero commission accounts. They got everything you need. And they've also got all sorts of bonuses online for the new year. So be sure to head on over to Switch. They got you covered. Take full care of your trading needs over at Switch. How to trade. This is a YouTube channel that we built over the last year, so I haven't posted to it in a while. You can find our live streams here. We prefer that you head on over to Switch Markets, so check them out there. A lot of videos here, and I've got the question 5 times today, so I'm going to go ahead and address it. Shane, I'm looking at swing trading. I want to swing trade. That seems to be hot right away, the first day of the year. Swing trading. Well, I like the 920 EMA crossover. Pretty darn good swing trading approach. Use it on the 4-hour chart for Forex, the daily chart as well. Check that video out if you haven't seen it. That shows you exactly how to trade the strategy and what you need to do to trade it. So when we talk 920, I'm all over the place today looking for 920 trades. This was the Halliburton stock we talked about on Saturday. On Saturday, I said, watch Halliburton on Monday. Maybe it'll go, maybe it won't, but we knew something was going to happen. Right now, it's up about 11% on the Venezuela news. More interesting, more to everybody's liking here, gold, all right? So we've got our gold market up right here. Here's our 920 EMA crossover on the daily. Not much has happened. We don't have a crossover. If you wanted to catch this crossover back on the 10th of November, you absolutely crushed it. Now, here's an interesting development, though. A lot of folks say, Shane, is the top end for gold? And I go, no, it's not. There's your 920 set up on a 4-hour. I got asked this question by a trader specifically earlier today, and the question was this: Shane, I trade gold. I can't sit in front of my monitors all day. I actually got the same question in our live chat on how to trade. I need a swing trading approach that's going to set me up minimal work, and by work meaning you don't have to sit here on a 5-minute chart or something like that. You can let these trades sort of run for you. There it is. 4-hour chart. I love it on commodities. I don't like it on crude oil, though, because that's not really what I like to do in crude. I'm 30-minute chart guy during the U.S. session, but that's neither here nor there. Gold is a true 24-hour commodity. The volumes typically are there throughout the trading day. They're going to start dying off probably right now until the U.S. close, but they're going to start up again on the Japanese Open, especially given this environment. You got a sort of a 4-hour bid there, though. So the question was this: Shane, how do I build a trade on this? And I go, well, watch the video. That'd be the first thing I'd do. But a couple of ways you could use your stop loss. You'll notice if you played your stop really tight there, you got swept out. That's what I call a retail squeeze. They blew everybody out before the market started rallying. So realistically, your stop loss needs to be down in here. Swing low. What does that mean? It means you're going to have to adjust. You're going to have to adjust your leverage so you can afford it. I mean, that kind of trade with full leverage is almost impossible to execute. You can see just how huge the dollar amount is. So you've got to be able to dial your leverage down. But if you can do something like that, you could definitely be looking maybe to the top of market structure as your first profit target, somewhere in there, maybe 45.48. That's not necessarily the worst idea in the world. But what about this? Now we're going to do my basic analysis on this type of trade, or excuse me, on this market here in just a second. Remember, 4,500 is huge. 4,550 is the all-time high. What happens if you break out over the 4,550 area? You're going to 4,750. So there's a lot up there. There's a lot going on. Probably a conservative trade, especially on a 4-hour chart, would be something like this. Be right up towards the top of market structure, this side of all-time highs. Give yourself an opportunity to succeed roughly with a 1-to-1, something like that. Interesting trade. We're going to be watching this one throughout the trading week. That's for sure and certain. Now, there's one last one I want to cover on this. Let's see, on this 920. Occidental Petroleum. Interesting price action. 4-hour chart. There was your bid. Came across the board the 30th of December. Take a look at what happened here. Huge rally. Okay, you went way up there, about 43.18. Now you're back down to 41. I still like the long side of this market. This could be a fantastic retracement buy in Occidental. And the reason why is you have to figure that there's going to be certain oil companies that are going to get their hands on Venezuela and they're going to get in there in prominent positions. Occidental's got a lot of power. They're a big-time driller here in the United States. You could potentially see Occidental getting a part of that Venezuela market share. That's going to be a bullish market driver. Do you want to buy it or sell it? Probably a bid from this level, 41s. I wouldn't get really too concerned unless we swept out maybe even this swing low down here at 38.75. But if you're looking for some short-term heat, you might be able to get some heat maybe up to 45, somewhere up in here. Certainly is possible. Interesting stuff in Occidental. Occidental is on the move. All right, let's take a look at gold with a more conventional approach with the Fibonacci retracements. This is fantastic stuff on the 30-minute chart. Nice big bullish break. This is just intraday long city. Spike low, spike high. Really great market structure right there. This is how I would be trading the U.S. trading day on gold futures. Right there, starts at about 6:30 a.m., 8:30 a.m. Eastern, 6:30 my time. Beautiful, beautiful 2-hour structure, pulls back. My compliments to the chef. That's beautiful stuff right from 44.33. I would have that on my radar late in the day. I don't believe you're going to get it. That is how Fibonacci retracements work. Boom, price comes down, hits 38%, and the trend is on. Absolutely fantastic stuff. Really excited about an intraday trade like that. As far as what we could be deciding on with gold, I get the question literally every, couple hours. Shane, gold, long or short, long or short, long or short, long or short. You want to be long. It's no question. Can you buy right now at 44.42? If you're using that 920 on the 4-hour chart, yeah, you could probably do that because you got a finite out. So your bid, if you wanted to bid at market right here, I wouldn't eat your lunch for that. You just know where you have to get out of that market. If I'm not already in and I'm not interested in maybe taking a 920 trade, my long-term numbers aren't going to be a heck of a lot of help. Long-term retracements, they're just way too far down the queue. Something very serious is going to happen for us to get there. But I would mark these key levels, and I would be sure that I did it because you want that all-time high marked. You always got to have that in your head. 45.50.04. That's not an accident. 45.50.04. That's your all-time high. Now, that's on this broker. Your broker may be a little bit different, whatever. That's your all-time high in gold. Understand where that is, and don't forget it. Do not forget that. Now, what else is going to be big? 45 even. It's a big round number. It's been traded. That's true. Hasn't been traded for a while. Okay. We're watching those areas very, very closely. What do I want to do right now? I'd love to buy it. Really, any retracement to buy. The daily, are you going to get a chance there? Not really. 4-hour chart. Looks like our pullback's already over. That's beautiful stuff right there. You're bidding basically 44s. You're up $50 on that. That's a huge trade. Right now, you're probably going to be on the sidelines. Now, moving forward, we're going to have every reason to trade. No question. Weekly chart, I can sit here and look at weekly numbers all day long. The problem is we're just going to have to wait. You can see last week's low. Beautiful. So what are we showing on every time frame? We're showing that the Fibonacci, the 38% level specifically, is working. What does that say? It means you're trending and you're trending hard. Be ready for the top side of this market. I want to be long. I don't want to be short, but I don't want to be long from right here. Do I want to sell right in front of 45s? You can do it. 4,500. You could sell maybe 44, 94s. Just be quick on the trigger. If you break high above 45, get out. Get out. There's no reason to hold it because there's no rules on how high this market can go. Given this geopolitical uncertainty, this thing could absolutely slam. You could go to, if China does something against Taiwan, you could go to 5,000 or 7,500 fast. I'm not kidding you. So we got to be aware of that. Don't get caught holding shorts here. If you want to scalp shorts, I'm in. Good risk management, aggressive on the stop loss. Yeah, let's saddle up and ride. There's enough volatility to where you can make money doing that. If you're talking about or thinking of taking a position of the short, you do it closer to the all-time highs and you stop yourself out once those highs are gone. Now, honestly, that's a rookie trade and a lot of people are going to do it, but it doesn't mean that it won't work. Me personally, the pullbacks have been there. The pullbacks have been so good to us. I'm hard-pressed to really dive into this thing to the short side, anything but the long. So I definitely wanted to cover gold there. Let's have a look at our Euro USD. Euro USD is definitely getting better. We're really starting to cook to the top side now. Love what's happening here. Love what's happening here. Printing 117.22s. This is pretty good stuff. First real trading day of the year. This is pretty good stuff. So you definitely interested. I'm fascinated. I can't wait to get involved with some meaning. I think this year is going to be absolutely fantastic. Give these ranges like a quarter to set up, 4, 5, 6 weeks to set up. We're going to have some ranges that are just beautiful. Great short-term volatility here. This has everything that you want. It really does. All right, let's see. What do we got? Derek, good to see you. Derek, good one, man. All right, we're on fire. Everything happened before the market opened. Yeah, Purple. Right now, everybody's settling in the U.S., everybody's settling in, and they're trying to figure out what's the play. What do we want to do tomorrow? That's what I'm thinking right now. We're looking closely. I'm going to show you some betting odds on when maybe the next strike can be coming. We're going to talk about maybe what could be next. And it's going to be wild speculation, but I have to talk about it because it's important. T Marine, I went long on the Great Britain pound CAD last night using the 920. Was nice. Fascinating. I'm glad you got some action. No doubt because of the oil markets. Anything to do with the CAD was moving. Definitely. Let me see. Purple, I'm out today, taking it day to day. Nothing wrong with that. Nothing wrong with that, Purple. You cut your losses. You come back ready to rock and roll. That's the way this works. If you got hit today, tomorrow, the next day, and Friday, it's going to be a solid trading week. No kidding. Jeanette, good to see you. Jeanette, welcome. Howdy down under. That's a tough time zone, still be awake, but fantastic. I'm glad you're joining us live. Happy New Year. Absolutely happy New Year to one and all, everybody that's joining us here today. We got a good crew, of traders. Very excited for this year. All right, guys, let's put on our thinking caps for a minute and think about what can happen. Poly market, here's your betting odds. I'm already looking at another U.S. strike on Venezuela. You can see that they have the date and the percentage chance. So by January 10th, 6%, 9%, the 31st. But it's interesting because as the springtime goes, and by the end of the year, it's about a 50-50 chance that you have another strike, 29% by March 31st. It's interesting how these odds increase as the year goes. So a lot of people believe that you're not done in Venezuela. I don't know. There's a lot of saber rattling right now. The news feed is evolving by the minute. I've been looking at X a lot this weekend, and I don't like being on there, but I'm on there and checking things out. And it boils down to this. If the government that's in control now in Venezuela does want to resist and does not want to play ball with the United States, there will be more incursions. There will be more military actions. There's no question about it. There's no question about it. That's going to be big. Now, we haven't talked at all about Iran and what's happening in Iran because there's only so many hours in a day. But major protests in Iran, economic crisis. The local currency has collapsed. Essentially, folks are in the streets. I can Google a quick story for you and show you, but it's very serious there. Growing Iran protests rattle leaders as Trump threatens to intervene. What to know about protests in Iran. Iran protests prompt Trump warning over deadly government crackdowns. Leaders struggle to end protests. U.S. action in Venezuela stokes fears. Khomeini has escape plan to flee to Moscow if regime fails. That's the one right there. Now, is any of this accurate? I don't know. I don't speak to the accuracy of anybody in the media. I speak to the accuracy of our charts and how we read our charts. I also speak to the accuracy of my experience in the markets. I have no clue if Khomeini has any plans to leave. No idea. None. But if you see regime change there and you have somebody come into power that is more receptive to dealing with the West, that's even more oil on the global markets. You're talking about freeing up Venezuela and Iran. That's a lot of oil. And I know it comes back to oil, but oil is energy. And at this time, and there's lots of technologies out there. We don't need to be relying on fossil fuels. We don't. And I'm not talking about electric cars or hybrids or solar or anything. There's all sorts of energies out there that can be used, can be adopted. They haven't been. We're still on the fossil fuel system. And as long as that is the case, oil is going to be incredibly important. And so it doesn't matter what you think of it. It just is what it is until it isn't. For me, oil is the engine that's driving everything right now. And we're talking about potentially a huge dump of oil on the global markets. That's why if this does develop, if you start to see regime changes all over the place, then oil is going to tank in a big way. Now, here's the other side of that. And we have to consider this. U.S. strike on Venezuela puts China's Taiwan saber rattling in focus. To embolden China's territorial claims, Taiwan attack unlikely. What Trump's Venezuela gambit means for China and Taiwan. We're already thinking Taiwan. If China goes into Taiwan, that's going to disrupt the global order. High uncertainty, not necessarily because of what will happen in the immediate incursion, but it's going to be about U.S. intervention and the Western intervention in that exchange. If things turn kinetic, oil prices go through the roof, at least in the short term. What I'm getting at is this. We're in a very fluid situation. Caution's always the better part of valor. All of these things that we just talked about are going to drive price action across the commodity markets, and that in turn is going to stoke interest in your U.S. equities markets, which are on fire today. You're up about 800 here. Let's take a look at the U.S. 30. We'll look at the U.S. 30 here. Very, very easy. Very, very simple analysis. We had our weekly Fibonacci retracements. We went right down, failed, sort of in front of 38%, and now we've just broken out to the bull to the top side. Why would we be rallying? Why would stocks be rallying here in the United States? Energy stocks are a big reason why the U.S. 30's up. Okay, so if the energy sector is really dominating, then yeah, that we could say it's a rally, but it's sort of energy dependent. Okay, I get that. But stocks across the board are rallying. So if I'm a stock market trader right now, I'm looking at the big round numbers. 50,000 is the play for Dow Jones Industrial Average, the US 30. 50,000 is a huge one, and we are almost there. Probably going to be a trade idea out later this week to short just in front of that. That's a beautiful short-term scalp. Exact entry is going to be a bit dicey. It's going to be like 49.5. It's not going to be 49.5. It's going to be 49.975, somewhere in there. Maybe 49.950. That's going to be a pretty rock-solid trade in my view. I mean, you just don't get – these trades just don't come along. That's going to be a pretty good one. You've also got the U.S. 100. The U.S. 100, you can see our analysis from last year. I haven't even looked at the U.S. 100. We're going to do that in our newsletter this week. Key level was 25,000. There was no question. That pullback right there you got last week, 25,081, and now you're back up about 400 points. All-time highs at 26,255. Key levels at 27.5. It looks to me like we've got sort of an ascending triangle going here. I think that we could be in a position potentially to break high once we decide to leave the 25,000 key level area. This thing's going and it's going high. This thing's going and it's going high. So what do you need for the US 100 really to jam? Cheap money. Interest rate cuts are what makes tech go. A lot of people disagree with that, but behind the innovation, you have to have financiers, and the financiers have to be extending capital at an affordable rate. That's essentially the heart of innovation, is funding, getting funding, right? That's what the Nasdaq's all about. So if you do see that dovish policy come into play, more than likely you'll see a bullish year out of the US 100. US 500. Do we have a key level here? Sure we do. We got a key level on all of them. 7,000. That's the one. Weekly chart. You want to look at the monthly? Monthly should be pretty obvious. What do you got here? It's a bullish flag. 2025 or 2025's panic lows of April, the tariff panic lows. What do you got here? We can tighten that flag up a little bit if you want. It's a bullish pennant. Look out above 7,000 is probably the next stop. A lot going on in the markets, guys. Definitely bullish look at stocks. Bullish open for everything, really, except natural gas. We'll cover that later. That's off about 4.5%. That's interesting, too. A lot of natural gas in these regions that we're talking about as well. All right, everybody, I've droned on long enough, but a great session, a great open to the year. If you have any questions at all, head on over to the howtotrade.com. Sign up for a free account. You can send me a private message there. I'm more than happy to get back to you. Let me see. Universal 44.12 gold isn't kind of demand zone I marked, but it had no clear imbalance on the minute, for the 15-minute and the 30-minute, but had a clear imbalance on the 1 hour demand to check out, please. We matched it, laugh out loud, 44.19. Yeah, I mean, I sort of showed you the way that I saw gold intraday. I mean, that 30-minute pullback was pretty good. It's pretty good. Let's see. Happy New Year from Israel. Absolutely, Ronana. Man, I have got to work on my pronunciations. That's my New Year's resolution, right? That's funny. A lot of folks talk about New Year's resolutions. I started 2 weeks ago with mine. Psychology for the new year. Sit down today. Write down your goals for the year. Write down how much capital you have to trade. And then take a look at your goals, and then take a look at your capital. Your goals need to be realistic. You can't come into this market with $500 and expect to make $500,000. If you're realistic about what you want to achieve, and you have realistic goals and your expectations are grounded in reality, you have a much better chance to succeed than someone who's going to show up with $500 and try to parlay it into $500,000. That's all I'm going to say. Now, if you have strategic concerns, if you're concerned about how to trade on a day-to-day basis, join our live streams, ask questions, hit up the How to Trade Academy, watch the videos, check out the daily analytics that I put out there. It's all across the internet. It's in the How to Trade trading room. It's on X, ShaneV_trader. It's at LinkedIn. Check out our LinkedIn at How to Trade. You can see all the analytics and live streams there as well. So there's a lot going on here. Like I said, I always I make time for traders that want to learn. If you want to learn, I'll make time to help. That's just sort of the mantra here. And remember, if you need any help in the markets, actually getting market access and the ability to trade, check out Switch as well. Absolutely a great place to begin. There's a lot of stuff on the way in Switch. I'm not going to talk about it yet, but pretty good stuff. Pretty good stuff. A lot of value passed along to the trader here. And that's what 2026 is all about. So for today, you write down your goal. You don't have to tell me your goal. You don't have to tell anybody else your goals. Write down your goal. Write down your available capital, how much money you have, all right? And then the next two things are you have to be honest with yourself. Write down your aptitude. Do you have any experience at all? Do you need to focus on learning? What do you do well? Do you do numbers well, or do you do analytics well? Do you read well? Do you learn off the page? Do you learn off of videos? Figure out your aptitudes as well. And then your time. How much time do you have to put into this? Can you go full-time? There's no shame in not being able to go full-time. As a matter of fact, I recommend all new traders not to go full-time. Learn at your own pace. Take it easy. Start slow. Don't quit your day job. View trading as a way to supplement your income and level up. Stay patient, discipline, the 3Ds, desire, drive, and dedication. Stick to it. Go slow, and you're going to find yourself in a position that is far superior than anything you could ever imagine by this time next year. That's the idea. Be in it for the long run. But there's a lot of you that are going to be in it for the short run, and you're going to show up, and you're going to throw all your money down, and you're going to trade it. And listen, if you're going to do that, a lot of people are going to shake their heads and say, that ain't the way. I am pulling for you. If you show up with your life savings and take a shot at the gold market, win. Hit it. I'm pulling for you. Hit it. Just remember, everything you bet, you have to be willing to lose, and you have to be okay with losing it. Need any help with the psychology end of it, be sure to reach out. More than happy to take time and share a little bit of what I've been through. Been through a lot. But right now I'm smiling. I'm smiling because these markets are moving, and we're going to knock them out. All right, everybody. Great to see you. Great to see you. Thanks for joining me to start the trading year. We'll be back tomorrow. Remember, NFP Live on Friday. That's the big one. We have a Switch Markets live webinar on Wednesday. That's going to be exclusive for the How to Trade community inside of the trading room and over on Switch Markets YouTube channel. If you want to see it, head on over there. Check it out. We're going to be talking about the 5813 EMA crossover, and we're going to do some live scalping as well. So it should be a lot of fun there. All right. Absolutely, Tammy. That's good on pronunciation. I am terrible on pronunciation. Dave, good to see you. Welcome one, welcome all. Thanks for showing up. We're going to be back tomorrow. Remember, if you miss any of these, they're available on demand all over the internet, so you can do that. Andy Tong, hey, Shane, Happy New Year. Just got on. We'll rewatch. Fantastic, Andy. We covered a lot today. You trading in prop firms? Roe, not so much. I've got full disclosure, I'm looking at a few prop firms that look to me to be relatively easy to beat. And what I mean is a lot of times when you're trading prop, you're trading against the firm, and I have no problem beating them. So, but the terms have to be there, and I have to be interested. Other than that, I'll just be trading my cash accounts. Let's see. Hurst, Happy New Year's. Great stream as always. It should be a fun trading year. Can't wait, Hurst. Good to see you. Welcome back. Jeanette, always a pleasure, Jeanette. Absolutely, Bobby Bob. All right, guys, have a fantastic trading day. Trade the action well, and we'll talk soon. See you.